Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA. Here now, Frank Napolitano from Mortgage Brokers Ottawa and Paul Rushforth from Paul Rushforth Real Estate.
Man, another beautiful day and beautiful week in the city of Ottawa.
Yeah,
Holy mackerel.
We've been pretty fortunate this summer. It's been crazy. I mean, yes, the grass is brown and flowers don't look great and stuff like that, but if you're looking to be out in the water or cottage country or just being outside, it's been beautiful. No rain. It's been just amazing.
Well, and photographing listings, I've got to tell you, has been especially waterfront listings, has been amazing.
Yeah, you got to Photoshop probably some green into the grass, right? So,
spruce it up a little bit.
Spruce it up just a little bit. But again, you're right. It's been a beautiful summer. I think a lot of people have taken time off, which probably, relates to the fact that maybe the real estate market isn't as robust. That as well as interest rates not quite coming down as quickly as we hoped they would. You put that all together and probably a good reason. But again, I think people deserve, the summer to be able to pull back a little bit, spend time with their family, with their kids. And we got another 2 weeks. We've got another week. I mean, this week I think will be quiet because I think a lot of people are taking that last week of August off.
Well, there's some kids, the French kids go back to school, I believe, this week.
Yeah, this week, right? And then the following week, I mean, the earliest ever, September 2nd, is when the kids are going back to school here in Ottawa as well. So the roads are going to get crazy, I think.
It's actually nice getting through. Like, first of all, the Queensway traffic is horrible right now. However, can you imagine if it was like September, October, where people are back at work and it's going to be even worse? But it's definitely puts a damper on going through the city.
Well, I think it's going to be. My understanding is that work in the center of the Queensway is not going to be done until October at some point.
Well, because they put August 29th, and I drove by this morning, and I said,
"There's no way.
Wait a second. In the next 5 days, 6 days, they're going to be able to get all this done." It doesn't feel like it, but who knows? Yeah. I mean, if they worked through the night, they could, right? So, but they're going to have to do something because 2 lanes through the middle of the city when traffic comes back is not going to be pretty for people. Especially with a lot of companies going now to 4 days a week in the office instead of 3 starting in September. So,
well, there's some. I think the government's they're talking about coming back full time now, like
January,
5 days a week.
January, we'll see. Some departments, and again, I mean, I'm for it and I'm against it. So, I just think that there's a lot of people that have benefited from working from home. And they actually give companies more than they would if they were going to the office because, if you're taking an hour to drive in, an hour to drive home, that's taking away some of your energy. Where if you're working from home and you get your kids off to school and then you sit at your desk and, I think you get quality time from a lot of people. So the problem is that 10 or 15 or 20% of employees, which I think are not doing the work that they're supposed to, whether it's at home or at the office, they're the ones that make it hard for everybody else. So I'm not saying that every industry, not every industry, but I think there's some industries that can get away with people working from home and you get good productivity from them.
So the last time we brought up this work from home thing, I got a nasty gram from a couple of people like, I'm more productive at home. I said, I didn't say you weren't more productive. I'm only talking about my job, my industry, my company. I don't believe you're more productive at home. I know some people believe they are because they're not driving in and stuff like that. But, how many times are you taking breaks and doing laundry and doing that where you wouldn't be doing it if you were at work? So don't send me a nasty gram by email, please, and tell me that I believe personally for my company, I did not like the work from home at all, and it will never, ever be incorporated into my company.
Some will say the time they're doing the laundry is the time they would be talking to a coworker about what they did that weekend. You offset it. Listen, I don't think there's a right or wrong in this. I think every company has the right to choose what they think is best for them and their company. And there's some companies like yours where you might want everybody in the office. In our company, we have a hybrid model, and it's working out just fine. So for us, our employees are happy. The risk of companies ordering their people back to the office, and I know I'm hearing it on the financial district in Toronto, is that a lot of them now are looking for other jobs because they want to be able to find a job to work from home. So you risk the chance of losing some really good employees and having to replace them. And good luck trying to find employees that want to work in the office, especially in Toronto, downtown 5 days a week.
Hey,
so
listen,
that's the risk.
The cost of a good hire is very, very expensive, especially with training and all that stuff. So you don't want to lose people. But at the same time, I actually know a number of people too who they say if my employer orders me back 5 days a week, if they're at 3 now, they're quitting their job. They're going to find a different job.
Another job. That flexibility has become a perk for a lot of people.
It has, and some companies can do it, some can't.
Which impacts real estate. Again, it impacts both our businesses from a standpoint of you have to be working to be able to get a mortgage, and you have to be working to be able to afford a mortgage and be able to afford a home. So some tough decisions, but I think people are still look for, if you can get a job where you're working from home, we saw it during COVID. I mean, you're looking for that. You don't want to be working out of your dining room, so you're working for that home with a den maybe on the main floor or upstairs. So.
Well, during COVID, there was builders who were changing their plans and changing, a living room. So, if you have a dining room, you have a family room, and then you have your living room, right? People are like, well, living rooms are kind of useless. I mean, you use your family room and your dining room. You never use your living room. So builders were taking those living rooms and turning them into offices. They're now going to be an office on the main level. And that happened during COVID, where a lot of builders transitioned to that. And some haven't got away from that. So they still build with just a dining room, family room, and an office and no living room. So
just closing it in with some French doors. And
And you can open it and obviously use it as a living room if you want.
Absolutely.
But most people were using it as that home office. And it was tough. I mean, when COVID first hit and people were working from home, there was people were working at kitchen tables and dining room tables and working from anywhere, but people transitioned, models changed, builders changed, everyone adapted and developed new models.
Well, and think about the number of people that were at home as well, because all the kids were home from school as well, being homeschooled. So you're in terms of space, real estate, you were...
I remember that homeschooling. That was so tough. I mean, kids having to homeschool on their computers at home and try to keep them occupied and focused on the school. And, for 8 hours a day, that was torture.
It was hard for families, right? Yeah. And I think it's impacted some kids growing up where they lost that social aspect that they were accustomed to for a year or two with the COVID and having to do it from home. So
even graduation,
an adjustment.
And like my daughter who graduated from high school during COVID, she didn't have a graduation. And then her first year in university, everything was closed. Now, she did go down to Kingston, to Queen's University, and stay in dorm because she wanted that experience. But there was like 6 people in dorm, and everyone was masked up and stuff like that. So she never even got that first year.
No frosh week.
No frosh week was canceled. So, I mean, she missed that first year of university that people love, like living in residence. And she lived in residence, but just with like 6 other people. So it was tough, really tough.
Interesting.
But again, I mean, we're going back. I mean, there's a lot of people that have their mortgage coming up for renewal that wish those days were here now, where, we're seeing everybody that's got a mortgage coming up now that took a 5-year at 1.69, 1.79. And, they're kind of holding their breath to see what the interest rates are going to be, 2, 3, 4 months from now when their mortgage matures. And it's a tough decision for them to make. But I'm still distraught at the number of banks that are calling clients and trying to convince them to early renew their mortgage. To me, it just blows me away that they're doing this to clients.
Yeah, you're a 169, 179. You're milking that as long as possible.
We're going to give you this great rate if you renew now. It's like, but no, say the truth. Like, the likelihood is that interest rates won't be higher 3-4 months from now. So here's what we're going to do. We're going to hold this rate for you for 3-4 months so that when your mortgage matures on December 1st,
you can lock it in.
At least you've got that rate as a guarantee. That's not what they do. What they say is we got this great rate for you, but it's only available till August 31st. So you have to sign up by August 31st, and it starts on September 1st. Well, why would you give up 1.69 to go into 3.99? How? In what world does that make sense?
And is that what they're pushing into, is 5-year fixed at 3.99?
Of course. Or 3-year, right? So they're pushing a 3-year, sometimes at 3.79, 3.89, or a 5-year 3.99. And but you have to do it now. And people ask me, is that a great rate? I say it's an awesome rate. The problem is what they've counted in there is the fact that look how much money they're going to save and how much it's going to cost you by you not paying 1.69 for the next 3 months, 4 months. So what they're doing is they're taking it off the rate, but in essence, you're paying for it because there's no guarantee that December 1st, those rates aren't going to be available anyway. And so why not keep the 1.69 between now and December 1st? Why give it up?
2026 and 2027 are going to be tough years. I think the only, once they have to renew their mortgage and they're coming off this 1 3/4 or whatever it's going to be and jumping into maybe a high 3s, low 4s, it's going to be hard to stomach. I think the only thing that's been a saving grace is the fact that they've built up a lot of equity in their home because they've had such a great rate, and we've seen what prices have done. The only people that are going to be in a really tough
27
spot is 27 because that's when people bought in early 2022.
Yeah.
If you remember, in Jan, Feb, March, and April of 2022, I mean, we got our average sale price got up to 740 and change, right? Now we're at 702. So we're making a rebound right now. But those people that bought in Jan, Feb, March, and April of 2022, when their mortgage comes up for renewal in 2027, it's going to be tough because the value of their homes may not have recovered to where pretty much what they've paid for their property is going to be really tough.
So the way the numbers are going right now, how long is it going to take for that average sale price to get back up to that 740?
Unless we hit a good blip, I mean, our average sale price is only up 3% this year, and it's probably going to end somewhere in the 3 to 4% range, and
which is normal.
Which is normal.
Month,
but you got to see it going up like 7, 8, 9, 10% over the next few years in order to get some of that back. But it's I don't see it happening. I mean, we're going to have a normal month. So if you're someone who bought in those months, just you're going to stomach a storm very, very shortly unless the prices start to rise and rates start to come down a little bit faster. And I know we've been talking about rates coming down for a while now, but it seems like it's kind of like the market. You look at the market numbers and they're decent. Number of sales are up 3.1%. The average sale price is up 3%, which is decent. It feels a little more sluggish, the market, than the numbers are indicating, where it's the same with the rates. Like, we've been talking about rates coming down, but it's almost like it's like a sluggish drop in these rates. I mean, was it the last 2 we stayed pat?
Well, we're 3 now that we're pat, and we're probably going to be a 4th. We can probably talk about it on the other side of the break. But, the inflation report came out, and it tells us that, the likelihood is that Bank of Canada may hit pause again on September 17th.
We'll talk about it right when we get back. 521-TALK, 521-8255. All right, Frank, the inflation report came out this week.
Yeah, good numbers. I mean, overall inflation down to 1.7. Fantastic. I mean, it's exactly what we're looking for, that number to be below 2%. The problem is the core inflation is still too high. It's closer to 3%. And basically, that's the number I think Tiff Macklem.
Explain core inflation.
Tiff Macklem looks at that number because that's the middle ground. So that strips away the food, strips away the energy, and that's the middle stuff. That's the manufacturing. That's the everything else. And that number's closer to 3. And the problem with that is his fear is that number's not coming down. So it's remained fairly. It came down a 0.5 percentage point, not enough. So my feeling is that the U.S. I think they're going to drop their prime rate. So again, they meet again on the similar day, middle of September this coming month. And I think that the U.S. Treasury is going to drop a 0.25 point. I believe the Bank of Canada. My money's on Bank of Canada remaining flat. And then the chances increase for hopefully if that core inflation number can come down. We've seen our Prime Minister eliminate the tariffs from the U.S. yesterday, and that is actually anti-inflationary. So that is good news for Canadians. Some don't like it because, again, we should be fighting the U.S. with tariffs of our own. But I think that Mark Carney, I think he's made an educated decision to go in this direction, which will allow for inflation to come down and help interest rates come down as well. So I think that he's, his approach is going to be interesting. We'll see how it works out. But economists are favoring what he's done because they understand that interest rates have to come down. So there's no question about it. The unemployment rate is likely going up. And the way to bring interest rates down to make sure that unemployment doesn't continue going up and creating jobs is by bringing interest rates down. Inflation's a big factor in that.
But we have 2 reports. We have an inflation and a job report before our next announcement.
But the inflation comes out the day before.
Yeah.
So
they've already made the decision at that point.
You would think, now unless the report comes in incredible, so again, if that core inflation number were to come down 0.5 percentage point, then I would say, there's a chance that Bank of Canada will lower, but my money right now would be on them just hitting pause one more time, seeing how the decision he made yesterday, how it impacts the inflation numbers moving forward. And it won't happen by September 16th. Like what he did yesterday will happen the month of September, but that'll show up in the October report. And then after that, it's October 29th. So my money would be on Bank of Canada lowering prime rate October 29th. And the U.S. actually doing it both in September and October by a 0.25 point because they have fallen behind us. Where we were more aggressive at dropping prime rate, they haven't been as aggressive. So I think they're in catch-up mode, and I think we're going to see that it's going to happen.
A couple of quick drops.
We need that.
We
right?
need that.
We need, and even just for, I find when they don't drop, the optimism just wanes. Like, it just, people are not as optimistic about what's going on in the market. And even a simple quarter-point drop, the optimism is through the roof. People start shopping again. It's great news, and they're in a much better mood to buy a property or sell their property or whatever they're going to do. So I would like to see, I'm hoping September we do see a quarter-point drop, and I hope we see one in October as well.
Yeah,
but
where I think it might be October and December. So I think we just might get that one more pause, and hopefully if the tariffs being eliminated do with what Mark Carney and I think the Prime Minister is hoping they do, we'll see a drop in October, another one in December.
That'll set up for a strong Q4 and leading into Q1 of 2026. I think that'd be great. I mean, obviously our spring market's our hottest market, our fastest moving market. But if you have a drop in October and you have a drop in December, those are, October, November, December, January are four probably slowest months. Right. And now you have two drops in there. It could get people off the shelf. Some optimism
for the spring, right? So, historically our spring market is when we see a lot of movement. And and that's the goal, I think. But for the winter, I will say that by dropping them, I think it gives businesses, there's a lot of businesses. You go in some malls and there's too many right now closed stores and malls. And
my God, everywhere.
It's incredible, right? And that's not good for employment. That's not good for our economy. So
some strip malls are, let's say they're going to
close.
Let's say there's, 10, 12 tenants in that strip mall. Some are half are unoccupied.
Yeah.
So it's crazy how they're
Well, I think in Westgate they're talking about shutting it down altogether and just building condos there. I mean, that's one of the oldest malls in Ottawa, and they're about to be torn down probably.
Well, even Place d'Orleans,
same thing.
You walk through there and it's like you could throw a bowling ball and not hit anyone there. But then you go to Toronto and you go to like the Vaughan Mills Mall, and it's like you can't even breathe. It's crazy.
You're right. But then for every Vaughan Mills, there's also malls in Toronto that are half empty as well. Yeah. So where Vaughan Mills is extremely full, there's other ones that friends of mine that live there say, like, you go in those malls, and especially the outdoor malls now, the strip malls, those ones are starting to lose their luster. And,
well, Amazon, right?
Yeah.
Everyone's shopping on Amazon. Nowadays you get everything with the touch of a phone. So
Well, I'll tell you, with the jobs report that we saw last week, or much higher unemployment, all these places are looking for people. The customer service is so at a lot of places. It's making it difficult to want to go out. I want to go support local.
But
what do
you got to
do?
be serviced properly, and you go to some of these stores, and right away you can tell the employee doesn't want to be there.
Yeah.
They need the job, they need the income, but they're not happy about what they're doing. They're not passionate about what they're doing, and that translates to the customer. And if the customer isn't getting that wow experience in a store, why would they spend their hard-earned money at a store that they're not
But businesses are struggling too, where like minimum wage is not cheap these days. Like it's almost $18 an hour. Like minimum wage is very expensive. And so a lot of businesses are trying to cut back a little bit. Instead of maybe having 4 or 5 people on staff, they have 2 or 3 on staff. And so, the service does drop. I mean, you go to restaurants now, services at restaurants used to be impeccable, but now, minimum wage is high. And so when you have to have that many people, service has gone down. Service has definitely gone down, but these rates are impacting businesses. A lot of businesses live off lines of credit.
100%.
And with rates as high as they are, those lines of credit are now super, super expensive. And so they have to, does the service suffer for them to stay afloat, or do they, service is awesome, but they can't stay afloat because they can't pay the bills. So, people just think of interest rates for homes, but it's businesses run on interest rates. Businesses run on lines of credit. There's lots of people that have to run a business on a line of credit.
So I was reading this week that they're pricing a 40% chance of the cut in September.
Yep.
So likely no. What you're saying.
Again, my feeling is that I think the Bank of Canada governor has taken a very, very guided approach as to how he's going to move forward. I think he regrets what happened in 2022 and letting the inflation run away the way it did and having to increase rates. I think he doesn't want to lower interest rates just for inflation to go up and then for him to reverse that trend. So I think, if anything, by sitting pat and hitting the pause button to him, it's like, I'm not going to make the mistake of dropping them and having to increase them. I'm just going to sit tight, let that inflation number get to where we wanted to, because we know we have to lower them, but let's make sure that we do it the right way so that we don't have to go the other way right away and hurt Canadians.
Hey, at least there's no talk of raising rates, right? So that's good news.
No, and that's just it. And I say to a lot of customers that have their mortgages coming up for maturity, the ones that are nervous about thinking about taking an adjustable variable, it's like I haven't heard one economist say about interest rates going up in the short term. Again, nobody can say what's going to happen in 2026, 27. And then the other part is obviously we've got a president down south that can change the way everything goes all in one speech. In one speech, the whole markets can turn upside down, and we go from interest rates coming down 100% to interest rates going up. Now, what I will say about him, he is extremely vocal these days about interest rates being too high.
Yeah.
Right.
And if we've learned anything about whether you like him, don't like him, disagree with him, agree with him, when he puts his mind to something happening, he just stays on it. So I think, if anything, it should give you hope knowing that he's really adamant at interest rates coming down in the U.S. because Americans are telling him they need lower interest rates, and I think he's probably going to deliver on that side, which is good news for us.
521-TALK, 521-8255. We'll be right back. So how's the summer market looking? How are we doing this August?
We'll see when the numbers come out. Keep in mind August is our last hurrah before kids go back to school. So it's a big vacation month, very big vacation month. So it's been good. I think our team will probably be up over our August last year. So it's been a decent August. But I think when the numbers come out, I think we're going to see that it was somewhat stagnant, kind of like what July was, even though the July numbers looked good. The average sale price went up, number of sales went up. But our average sale price actually came down from June. So our average sale price at the end of June was $704. At the end of July, it was $702.
Right.
So we came down a tiny bit in our average sale price, even though it was up July over July. And I think that what we might see in August is we'll probably see the numbers up again, but that was over August of last year. But we probably will see the average sale price still hover around that 702, 703, 704 in that range. So we'll see when the numbers come out. It feels like it's been a little bit stagnant, but keep in mind, a lot of our realtors have taken time off. Consumers are taking time off. I always laugh with my real estate coach who's from, Dallas in California. And when I tell him that, there's not a lot of people working right now in the industry, and he's like, well, why not? I said, well, because we live in Canada.
We get summer. We don't get summer 12 months a year.
Yeah, we don't get sun 12 months of the year. When we have July and August rolls around, kids are off school, and we actually see sun, it's vacation time.
We take advantage of it.
It's cottage country time, and it's even myself. I've used my cottage more this year than I have in any year past. I used to go up after the radio show, and I'd come home Sunday afternoon. So I'd go up for one night. Whereas now I spend up there, Thursday, Friday, Saturday, and come home Sunday. But it's so close to my West End office, I can just work from my Canada office or work from the cottage. And so I've spent more time at the cottage this summer too, which has been nice. And I think a lot of people have, a lot of realtors and a lot of consumers have spent a lot more time in cottage country and vacation time and, enjoying the outdoors. And we've had such a great summer, so why not?
So buyers are waiting.
Yeah, there's a lot of buyers in waiting, but I think a lot of buyers too that are still waiting and waiting and waiting for some of these rates to come down as well. But saying that, I talked last week about the fastest moving market right now is our townhouse market. It's up almost 9%. So it's our fastest moving market, which is a first-time home buyer product. So there are first-time home buyers who are definitely come back into the game. There's definitely investors come back into the game, but not everybody. They're waiting for those rates to come down a little bit. I hope they're not waiting for prices to come down because that's not happening. Our prices are going one way and they're going up. We had a little blip, over the last couple of years, but prices are definitely going up and rates are definitely coming down. So I've been telling buyers, this is the time to get in, stomach the rates for a little bit. The rates will definitely come down, but you're getting into a product for an affordable price. Whereas in a year, it may not be affordable. It might be up 40 grand, 50 grand more than where it is right now. So I'd be getting in now, stomach the rates for a little bit, get where the prices are right now, because we have started to see the prices start to climb. So, and if you're a first time home buyer and you're looking at that condo or that townhome, those are besides the condos, but the towns are moving very, very fast. The condos are very stagnant. The condo market is the only market that's actually down in the city right now. So our condo market's really put the lag on our overall numbers for sure.
I always say when it comes to real estate prices, just look at the don't get so caught up in it, because if we went down 2%, it might be that we sold more townhouses in that month versus single homes, which brings that average price down. So don't get caught up in that number. It's just a little blip sometimes where, we had months, I remember during COVID, where $3-4 million homes were selling. So the average price was going up tremendously, but only because there were these two huge sales that brings the average price up. And, and I think if you said that the townhomes are up 9%, well, that would explain why we're only going to see a 2 or 3% increase year over year, because the townhomes are actually
under the average sale price. Yeah, correct. Yeah, they're the lower end of the market. So
right.
if we're getting the lower end of the market that's selling more, it is going to lag your average sale price. And yeah, I like to use the average sale price as a barometer for the city and what's going on. And we were at 740 and change. We dipped all the way down to like 670. And now we're on our way back
to normal.
We're back to normal. And it's
how
actually
many listings 4,000 or 5,000.
Yeah,
we're
we're starting to see a typical Ottawa market where realtors have to really sharpen their pencils and do a good job. Listings have to be perfect. I mean, I was doing some searching the other day. In fact, I sent one to Greg who we had a little chuckle over. If you're a realtor in today's business and you're taking iPhone photos, like, nothing against the iPhone, but if you're not hiring professional photography, you're behind the 8 ball in that for sure. So listings have to look amazing, but you also have to do a great job with all the write-up and the pictures and positioning and marketing that listing in the proper way, which is what people pay us to do, right? Like when people say, well, what do you guys do? You sell homes. Well, no, we market homes. Like, our job is to bring buyers to the door. The house has to sell itself. So our job is to actually to market the property and market in the right way. And so realtors are having to now sharpen their pencils and do better marketing and do better pictures and have their marketing plan in place. And you can't just wing it, stick it on the market and hope it's going to sell. And one listing I sent to Greg yesterday, I was almost going to make a joke saying, "Hey, Greg, did you take these pictures?" Because they were horrendous. Like, I've never seen bad pictures like this in my entire life. And this is someone's paying this person a lot of money to market this property. And so I like the fact that this makes us sharpen our skills. This makes us do better for consumers. And we earn our money in a market like this. We definitely do. And buyers, like when you're showing buyers, I remember during going through COVID, it was like, okay, this is the house we're showing you and you have to buy it today. Now it's like, okay, I monitor all the feedback and most of the feedback says, hey, great home, showed beautifully. We're going to look at some more this week and get back to you. There was times in the market where that was not even an option. Like, get back to you means 2 minutes. Like, this is a different market.
Make your decision and get in now.
Yeah, but that's not the market we're in. Buyers have choice now. Inventory's up. Buyers have selection. They have options, and we're seeing
sellers, right? Sellers have choices too. And I'm with you. I just scratch my head. You're paying that much to a realtor. You deserve professional photos. You deserve professional videos. And why would you choose a realtor that's going to use their iPhone or flip phone or whatever to take pictures of your house and market it when the cost is similar if you get a professional real estate agent who has probably access to more buyers and is going to put up the posting properly so it's going to attract buyers to your door? It's a head scratcher for me, because the number one complaint I hear from people is real estate agents cost too much. And I say, well, you're right. They're expensive. But if you get the right one who does the right work for you, you're likely going to make up most of that cost in the fact that they sell your property for top dollar if they do it properly.
Yeah.
But if you're going to go cheap on trying to sell your house, then the likelihood is that you think you're going to do well by getting an offer. What you're not going to know is maybe another realtor could have gotten you $10,000 more, which would have offset way more than what it cost you to do what you did.
There's certain things you can do yourself. Cut your own hair. Don't sell your own house.
That's
right?
Floby. That's the old Floby infomercial.
But don't sell your own hair. Don't sell your own house. Like it's
don't cut your own hair. Please.
It actually takes.
Please don't cut your own hair.
It actually takes a specialty in order to, like, the real estate course right now. One thing I will tell you what the real estate board has done is they've made the course extremely tough. Look,
that's good.
Which is
amazing.
Amazing.
It in our industry too now.
You do.
We're
you
next.
Guys need to pick up your industry in that way too. But like the real estate board it's now a Humber College course. And I went through it with my son. I'm going through it with another agent right now, and I helped them study. And I was like, whoa, like this is, man. Now I wish they'd teach them other things that are, that you're
Real life.
that you're going
Right,
to
they
use
teach
in
you,
real
yeah.
estate. But I like the fact that the bars of entry are now extremely tough to get into real estate. I mean, because they
It's a
should
professional
be.
trade.
They should be tough, and it's really tough to get into real estate right now. Really tough, which is good.
Well, I'd say separate from the photos and all that kind of stuff, which I obviously think is very important. But I may be slightly biased
you're a
on
little
it.
biased.
A little biased
based on what
but
you do.
making sure that the realtor you're hiring is a professional and is going to answer their phone.
Well, that is one of the biggest complaints in real estate is that how long it takes a realtor to get back to people. And sometimes people are like, I called on this house, I called this listing, and the listing agent didn't even call me back. I'm like, what? You could have been a buyer for that property. And that's one thing, Greg, I'm glad you brought that up. One thing that I actually brought here into Ottawa was an inside sales team. So like, I understand that if I'm on the road or one of my agents are on the road and I'm meeting with a client, my phone is off. Then maybe I have a couple calls to make. Then I have to go meet another client. And if some lead comes in on your property on my phone, it might be 4 or 5 hours till I get back to them. So I've literally hired licensed realtors who sit on the phone from 9 a.m. till 9 p.m. And those leads go directly to that department. So if they don't answer that, if they don't call back in, let's say 10 minutes, that's a fail. So when the average response time is 5, 6, 7 hours, ours is 5, 6, 7 minutes. And that's the way it should be because those are leads for your property. Someone wants to look at your property, wants to have information about your property. They want it now, or they're going on to the next agent.
If they're taking the time to pick up the phone and make that call, they're hot.
They're hot
buyer.
And so when you call my company, it's not coming to my phone. It's coming to my inside sales department who will answer every single question for you and help me with the communication part of the game. And that's in every industry, like mortgage brokers, realtors, like
Good luck reaching a bank today.
Right? Like,
oh my Lord.
Yeah.
Like sometimes I got to call a branch because I need something. The amount of directions you got to go to be able to get to somebody you want to talk to. Can they just have a direct phone number? And then if you get a direct phone number, you're 95% of the time you're getting a voicemail. It's like nobody wants to answer phones today.
Your call is very important to us?
Yeah. Oh, yeah. Your call's well, then answer it. That's always what I want to say. Well, then pick it up. Pick up the phone.
So that's something that I developed really early in the game because I noticed it right off the start. When realtors used to have to pick up the phone to call other realtors to talk about properties and all that, I'd get no one calling me back. Like I was like, why is no one calling me back? And I said, this is an industry issue that I want to solve. And that's why I developed an inside sales team where we have 4 people on the phones from 9 a.m, 9 at night, and 9 to 5 on the weekends. Their sole job is to sort, qualify, and convert leads for your property. And that's just something that I've developed. But so if I'm costing the same as other realtors, but yet I have that department, I have professional photography, you get what you pay for is really the essence here is you get what you pay for. And these are things that you deserve on your biggest investment. You deserve that on your biggest investment. And that's why we're selling homes for more money than most people are doing.
Agree, 100%. And I'll tell you what else is happening. Banks are starting to talk about using international employees to be call centers for them.
Yeah, it's terrible.
And I actually, I've heard a couple of mortgage brokerages thinking about doing the same thing to save money. And it's like, wait a second. We live in Canada. We're supposed to support our own Canadian people. There are people looking for jobs. And really, instead of hiring people inside your own country and supporting them, you're going to go and support another country's employees because you're saving a few bucks here and there. I just think it's wrong. I mean, I'm totally against it. I think we support our country. And listen, I'm getting tired of hearing we're Canadian, support Canadian, but I believe in it. But the commercials are just too much now. But I believe in the fact that let's support our own country. If anything, it's taught us during this trade war that we're going through. Let's do more stuff within Canada. Let's try to support our own country, bring our employment numbers up, and let's try and help each other as opposed to helping other countries.
You know what happens with those call centers too, Frank? I remember one time I called on a property and I got one of those call centers, and the lady answers, and her English was not great, but she's like, "Oh, the property you're looking at is in Nepean."
Yeah.
I said, "Do you mean Nepean?"
Yeah,
Nepean.
Yeah.
I'm like, no, that's Nepean. So that's the person who's supposed to be giving you the information on a property.
Yeah.
Doesn't even know where the property is, right? So you can't outsource everything.
No, and I think if you're going to outsource, it better be within Canada because I just don't agree with it outsourcing outside of Canada. Not in our industries, not in yours or my industry.
Well, and there must be some privacy issues with that as well.
Well, that's my biggest fear is that now we're giving another country all our clients' private information. I don't think our clients would be too crazy about knowing that their income, their SIN number, and all that stuff is going to another country. I'm certain that they're not crazy about that because I can't imagine how secure their systems are going to be down there.
100%.
521-TALK, 521-8255. We'll be right back. So, Paul, over the break we were talking about, well, in an earlier segment we were talking about one of the hottest products right now is townhouses.
Yep.
And we got something special.
Yeah, we have I talked about it last week, and it's the grand opening of the Clermont subdivision, Southwest Park.
Golf course or no?
No, this is not on the golf course. Those are in Rockland, those townhouses. But September 7th, southwestparkhomes.com, southwestparkhomes.com. September 7th, between 1 and 4, I'm hosting a grand opening for the Russell subdivision out in Southwest Park. Townhomes starting in the low fives, like really low fives.
So 501?
No, they're about 506, 507.
Okay,
and
I was close.
But you know what? They're a dream townhome, and we're hosting this grand opening for this subdivision. We're building up to over 100 homes in that subdivision, so it's going to be a beautiful subdivision. And Charles always does an incredible subdivision. So come see us. I'll be there. Frank unfortunately won't be there because he'll be out of town, but Greg will be there. September 7th, 1 to 4, grand opening. But if you go to southwestparkhomes.com, you can get all the details where everything is, and it's a brand new subdivision. Come out for the grand opening, ribbon cutting, and all that. It's going to be amazing. And
I know you say we. I know you say we, but you're not building it, right? Because that would probably bring down the value a little bit.
You don't want a hammer in my hand, Frank. No, you don't.
I know. That's why I'm saying it. There's no hammer in his hand.
I'm really good at instructing, though, and helping, but you don't want
the walls will be straight. Don't worry.
I can tell you right now, my girlfriend's probably laughing because she's seen the hammer in my hand, and she's like, don't touch anything.
So it's being built by Clermont Homes.
By Clermont Homes are doing the building. Yeah, so you can
Charles and Natalie know what they're doing.
They know what they're doing. They know I don't know what I'm doing. I know how to sell them. I don't know how to build them.
That's good. You know what? At that price range, though, first-time home buyers, I mean, it's probably very similar to what you're paying in rent.
Yeah.
With the interest rates in the low fours right now, if you're buying something for $500,000, you got a $25,000 down payment. Most of your land transfer tax is covered because you're going to get a $4,000 rebate. So a couple of $1,000 for land transfer tax over and above. On top of that, you got a couple of $1,000 for legal fees. So you need about $30,000. And if you look at what your mortgage payment is going to be, it's going to be very, very close with the property taxes and the insurance. It's going to be very close to what you're paying in rent right now. So, it's an opportunity to get into get your 2 feet into home ownership and build some equity from there. It's not going to be your forever home, but it could be a home that's perfect for 3 or 5 years and build yourself some equity.
We're seeing people staying in homes longer right now, like especially in a nice constructed townhome. They're not moving up to that bigger home right now. So we're seeing people staying in their homes longer. And it used to be, the natural progression was you buy your first little townhome and then maybe you move up to a somewhat bigger single, and then maybe it's a really big single, and then you're eventually going down to that bungalow, and then eventually you're maybe, doing something else.
An old folks home, a retirement home.
Retirement residence.
Condo first,
then a retirement residence.
Or kids' houses at that point, because I think we're starting to see that. I think we're starting to see a lot of the older seniors now just moving back in with their parents and taking up a room in their parents' house, especially if you lose one of your parents and there's only one left and they're alone. So I think we're starting to see it all come full circle now.
Well, we're seeing the granny flats became very popular also through, they call them granny flats, but like an apartment in the basement or something like that. They became very popular during COVID. And actually some builders, we talked about earlier, builders transitioning to having offices built in homes now. We saw builders who are now building with granny suites in them as well, because they know, one, kids aren't moving out fast enough these days. So you could have your kid at 30 years old still living at home. Or when the parents get a little bit elderly, they don't want to put them in that retirement residence. They're not cheap, that's for sure.
No.
And so they're putting them in sort of like a nice granny suite, and beautiful big windows and lots of space. And so builders started building like that. They became very, very popular. So...
Yeah. And Italians way ahead of the curve, right?
Two kitchens,
the
right?
Second kitchen, I knew that was coming up.
Way ahead of the curve. Yeah. I mean, we've been doing this for 30, 40 years, and now guess what people are looking for? That second kitchen, so their kid can go cook in their own kitchen if they're going to overstay their welcome and 35 years old and still living at home. Well, you got your own kitchen, like stay out of my kitchen kind of thing. So.
Absolutely.
Right.
Yeah.
Birthdays, Frank?
Yeah, I got a good friend of mine who we're heading to Italy on Thursday together. Ruth Gitana celebrating her birthday on Tuesday. And like I said, I will be going away. So we have the very talented Lisa Belanger filling in for me for the next 2 weeks. And then after that, 2 weeks, Sherry Crease, our president of our company, is going to be filling in for me as well. So I'll be listening. I might even call in. We'll see. I'll be in Europe where it'll be 5 p.m. Just after our little afternoon nap in Europe. Yeah. So no, I don't drink. I'll be having a cappuccino. No, you're not allowed to.
You'll have some grappa.
Yes, and you're not allowed to have cappuccino after 11 o'clock in Europe because they mock you. So you can have an espresso, not a cappuccino.
I will tell you one thing, that you just brighten my day knowing that we have 4 weeks of no Frank. Yes. This is going to be so amazing, Greg. And think of the listeners. It'll probably double over the next 4 weeks.
Yeah,
double.
For sure. With Lisa and Sherry, I would listen to. So there you go.
I do have a couple birthdays. Actually, up at the cottage last night, it was like a birthday fest. We had some couples come up, and it was like everybody's birthday. So Erica Williscroft, one of Petra's very, very good friends, it was her birthday yesterday, her 40th yesterday, and also Stephanie and Jason Applejohn, a lovely couple. It was their birthday as well. So it was a bit of a birthday fest. And actually, when Frank comes back, we will have Stephanie on the show, who owns Mary Maid. She'll be on the show with us when Frank comes back. So
yeah,
awesome.
Have
a great trip to Italy.
Thank you.
And you packed your Speedos?
Ciao. Oh, no.
Capris,
Speedo,
your Capris.
Lots of good food and wine. I'm going to be very lucky.
Yeah.
Please support local business and charities, everyone.
Have a great week.